In today's video, I want to share some thoughts on DRS. Anybody that watches the channel already knows this, but I'm not here to provide financial advice, only my personal thoughts and opinions. I just share my perspective on things. Always do due diligence and your own research. It's very important. But jumping right into it, I believe, a kind of common misconception out there, so to speak, is that, just individuals registering shares will just push the price up over time. Or people that say, DRS, look, nothing's happened. Everybody's DRSing their shares and nothing's happened in the stock price. Well, no. It's not that simple in my eyes. How I see it is DRS shares are registered long-term holders. I just see it as confirmed shares that are going to be held in the long term. Obviously, nothing's for certain, but my point is nobody that's trading is going to take the time to pull their share from a brokerage and register it in their name at the transfer agent, which in GameStop's case is Computershare. So having said that, I think over time, as the company begins to show signs of success, growth, whatever Gmerica winds up to be, and free cash flow, positive net income, positive EPS, all these different things, because the company now seems to have a focus on profitability. Next earnings will be exciting to see. How true is that? How profitable are they? Of course, it's Q4 of 2022 that'll be reported. That's retail's best quarter always. GameStop's best quarter is always Q4. So I think the real test is throughout 2023. But if we see the company profitable, any kind of good news, you have to understand, any kind of real volume again, we haven't seen significant volume on GameStop in a long time. If a lot of shares are held by insiders and directly registered shares with individuals, that's a lot less shares just out there. Then, there's also institutions. You can think whatever you want's going on with those shares, right? I think they're loaned out and all kinds of various things. And also, if, there is potentially something fishy going on with the shares, right? Let's just say that. DRS is a share count in itself. It's counting how many shares individuals are registering. So over time, the shares are being counted up. And I guess what I'm getting at here is, overall, if GameStop just continues to succeed in growing and just trimming the fat and having a focus on profitability, they can deliver shareholder value and get to wealth maximization. And what I mean by that is they can issue dividends, potentially NFT dividends, definitely cash dividends, I think, are potential in the long term. And then the big thing that I'm looking for down the line is share buybacks. And there's other ways, shareholder value can absolutely be delivered, but those are just some of the main ways. And I think share buybacks will be massive considering the big picture of things. And when the company has a net profit, they don't have debt, they have cash on their balance sheet. And by the way, some of that cash is in US marketable securities, which are essentially, T-notes, government bonds. I forgot exactly off the top of my head here. My point is, with government securities that now, in a high interest rate environment, they're actually getting some return on that cash. So having said all that, if the company starts to grow and see success and anybody, let's say there's any kind of hype storm again, any kind of FOMO, a lot of shares will already be registered with individuals. A lot of shares will already be held by insiders. So there's not going to be a lot out there to contain the price. So the price can move very easily. And kind of the reason, it kind of works both ways. Look right now what's happening. The stock price can move down. We've seen it several times before. 3-4 million volume days where the stock price is down 8, 9, 10%. So much price movement on such little volume. That goes both ways. What goes up that much, I'm totally butchering, when it goes down that much, can go up that much on the same amount of volume, just theoretically, right? But it's as simple as that, because if there's just not as many shares exchanging hands, it doesn't take a lot of shares exchanging hands to move the price significantly. So essentially you can move a lot one way or another just because so many shares are directly registered. A great example of this is Dillard stock, ticker symbol DDS. I encourage all of you to look into it. I think it's a great example of a bunch of individuals just registering their shares, mostly insiders, because Dillard's is run by a company, or a family rather, with the last name Dillard. And they started paying special cash dividends. They did 2 years in a row in December, this past December and the most previous December, of $10 cash dividends, one-time special dividend. They also have a 20-cent quarterly dividend. And on top of that, they've been buying back shares with the cash they're generating with their cash flows. Just an example, just spending out a bunch of thoughts here. You can disagree, that's fine, but that's kind of some of my perspectives on DRS right now, but hope everyone has a good night.